in at. Sure enough, we've also taken a step back in line with what the global peers have done. 2% lower for the Nifty right now. Sure enough, we've given that 24K mark. In fact, slipping quite a fair bit. 400 points of a knockoff is what you're seeing on the Nifty right now. For the futures, that is. Union Bank, Bank of India, HPCL, BPCL, Swiggy, wherein there has been a top-level exit. These are all stocks which are taking it on the chin. Within the Nifty, Interglobe Aviation, Eicher Motors, Geo Financials, SBI is down about 3%. And then Reliance, which is weighing heavy today, almost a 3% knockoff on that stock alone. Bajaj Finance down 2.7%. HDFC Bank down about 2.5%. So within Reliance and HDFC Bank and that knockoff that you're seeing on both those stocks today itself, you're seeing quite a large chunk of the Nifty weightage under significant amount of pressure. But what's happening within the realty market and what's happening with housing sales? Let me welcome on board and try and get a sense of what the demand, supply and pricing scenario is. We've got Ghulam Zia, Senior Executive Director at Knight Frank India, joining in on the show right now. And who better than Irfan Razak himself, the Chairman and MD at Prestige Group, to talk about whether or not there is a slowdown in housing sales and, of course, what is the overall realty outlook looking like. Mr. Razak, morning. Let me start off with you first. We've often debated whether this slowdown in IT is impacting sales or not, and you've always come back strongly and said not at all. In the Bangalore market, which is your largest market, is pretty much in ship shape. But going forward, any signs of a slowdown at all?
Good morning. Firstly, I think the quarter that just went by, 31st March, we had a pretty large quarter, and then we exceeded our guidance handsomely and crossed the 30K mark for the overall year, which I believe is a very big high for the housing sales for our company. And that shows the health of the market also. And I believe that the market is still very strong. Now, very recently in this month, in fact, particularly this weekend, we had a big launch for a large development in Tellapur in Hyderabad called Prestige Golden Grove. And that has done extremely, extremely well. And there has been a great demand. So I don't see any sort of let up or any sort of slowdown in demand at all as far as the residential sales are concerned. In fact, our only endeavor will be and is always is to see how we can bring in better inventory in good locations so that we can keep up the same momentum and sustain the sales growth.
Mr. Zia, let me come to you. Give us a sense of what you're seeing on ground and whether there are any specific ticket sizes, pockets which are seeing maybe are probably seeing a slowdown at all. What are you seeing?
Good morning. Thank you so much to be in this August company with Mr. Razak and you all. A pleasure talking to your audience all the time.
Very good morning.
And the question that you're raising, let's straight away come to the specifics of what the market is behaving right now. It's very fair to say where Mr. Razak is sitting in South, the market is going great guns, But on the other side, the moment you come to NCR and Pune specifically last quarter have been terrible. Almost about 11 odd negative YOY growth on quarter is what we are looking at. So these two markets have been in bad shape, Delhi and Pune. But on the other side, even Mumbai has seen a degrowth of almost about 6-7 odd %. So actually speaking, the northern markets are the ones which are going great guns. Bangalore is on top of the rank, and so is Hyderabad, Chennai, while it's a smaller market but doing fairly well. So the southern markets are doing great. And since you spoke about segmentation, again, the high end, the luxury and super luxury is selling in every market, including NCR and Pune. So NCR market, where net it is 11% down, the super luxury, the high-end markets, above 50 crore kind of price ticket segment market are the ones which are thriving. So the problem very evidently is that the mid to lower end of the market has actually decimated in pretty much the whole of the top 7-8 odd cities that we normally cover. And that is what is impacting the sales number. Actual numbers are shrinking because the lower end of the market is not behaving, is not doing well. And again, purely because the supplies are not coming in. Every developer who's catering to real estate is obviously for low-hanging fruits and better margins, etc. Looking at mid to upper end, and that's what is showing on ground. Lowest end, which is typically the large chunk of market, is shrinking, and that is reflecting on a. If I look at the overall number of top 7 or 8 cities, the number YOY in Q1 has shrunk by 4%. Not too much to worry about, but when you're looking at specific segments, there is specifically the lower end of the market is shrinking very fast.
And sorry, just what explains this trend playing out, Mr. Zia, if you can give us that perspective?
Well, 2, 3 things. First of all, the cost of construction, I'm sure Mr. Razak would also expand on that. The cost of construction shooting up due to last 2 months, actually, whatever this mess going on in Middle East. We do see a lot of cost of construction passed on to end user, and most price sensitive market is the lower end. The upper end, as I said, is going on great guns. And that said, another thing is that we are also looking at job losses. And again, job losses start with lower end of the market and then gradually look at the upper end. So this is exactly, these are 2, 3 key reasons for the lower end of the market not to do well. And as I said, to begin with, the supply in the lower end of market doesn't exist. There's no addition of stocks in the lower end of the market. And that's what is also impacting. If you don't have where to sell, how will you find buyers to buy?
Okay. Mr. Razak, talk to us about those costs which Mr. Zia just spoke about. What's the sense like on ground, and what's the impact likely to be, in your opinion?
I think the costs are gradually have gone up, and the last 2 months has been a hit, but that has to be evaluated. According to me, I'm always very positive. I think this cost, which is there in the last 2 months, we should sort of level up. Water should find its level, and things should stabilize. How soon and when is a question. But till then, we have to make sure that we keep doing what we are doing and try and see how we can not exceed our budgets that we have for each project. But going forward, if the costs go up too high, ultimately it will tell on the price, and then the customer has to bear that additional cost. Of course, not for the old sales, because those are all fixed contracts. It's only for the newer sales.
Mr. Zia, the other point, of course, is what happens to GCCs now, because they account for a good 48% of the total office demand. How sustainable do you think this concentration risk is at a time when global tech hiring itself is slowing down?
Well, it's a very good question to ask, because nobody can actually convincingly give that answer. But let's not forget, last 3 years have been a bumper run for office market in the country. If you look at the last quarter itself, we have closed at 30 million square feet of office absorption in a single quarter. Historic high. Now, of that, when you're talking about almost 48 to 50 odd percent, well, that 48 to 50% is that of 30 million. Unbelievable. And that's what the GCCs are, the global capability centers, are actually ruling the roost. And the reason is that whether it is the cost arbitrage in real estate, or the salaries, or the human resource costs are the lowest in the world. And of course, I would not want to gloat about it, but our youngsters are one of the best if you want to recruit in tech segment or GCCs or AIs, etc. And that's the reason why GCCs have been flocking to India, because the cost arbitrage, the advantage that they're getting by coming to India is outstanding. And while rest of the world is facing lots of political uncertainties, let's not forget the peaceful environment that we offer in the country. So GCCs, at least for now, is having a great times, and I want to believe the way things are going ahead, and someday we will find a solution to the Middle East mess as well. So the GCCs will be back in action, but for the moment, GCCs are going great guns.
What about the tilt, Mr. Razak, with regard to the 1 crore plus kind of category? Are you also on ground seeing that the tilt there is stronger versus the sub 1 crore kind of market? And what explains that?
Well, I'll tell you now, this just to carry on the conversation of GCCs and the demand for office.
Sure.
We've done a record high of about almost 100 million in the country throughout the year, which is quite amazing. And if you ask me, the inventory levels, the vacancy levels across the board for all developers who are into the office market is it's a single digit or less than that. So that's how we are, and the demand has come. Now, see, the corollary to that is once GCCs are coming in, occupying space, creating jobs, once these jobs are created, these are high-paid jobs, so automatically the demand for housing goes. Now, that coming to your question of 1 crore plus or 1 crore minus, the market is there. In fact, I would say the market is there even for the sub 1 crore. It's only a question of cost of land, cost of construction, and what price we can bring it to the market, which is affordable. So that's where the whole balance comes in. But if we do have the development which is we are able to offer sub 1 crore and at a good location, I think even that will be a sellout overnight. But the thing is, now that's a big balance that we have to do. And today, whatever is available is above a crore, and between a crore and 3 crores has become the sweet spot, which will still selling at quite a good volume and velocity. And I believe that that goes on. And of course, we talk about luxury market, but luxury market is a very small niche market. You can't sell luxury every day, all the time. So that is a very small market. It doesn't give you those volumes and it gets you value, and it's a separate segment altogether. But I would say if you are talking about housing, we should be talking about the mid-income and the lower mid-income. That's where the sweet spot is for if you're trying to look at large volumes.
And the other thing also, perhaps, Mr. Razak, could be the data center opportunity too, right? If GCCs are weaning off.
Yes, data centers, another huge opportunity. We have just completed as a general contractor for a large corporation, a data center in Bangalore. And we have got some MOUs to do data centers both in Maharashtra as well as in Andhra. We are pursuing that, and we do hope that we'll be able to put this into reality, and also in Bangalore. So I believe there is a lot of scope for data centers, and that's the future.
Mr. Razak, strategically though, and unfortunate as it may be, a fallout of the war in West Asia, you think all the NRI investment money may move from places like Dubai perhaps back into India? Could that be a fallout?
See, these things, now real estate is not so elastic that you just move like a stock market. After all, it is rigid. So people will take their decisions. NRIs have always been buying in India and always have been investing in their home country. And they also have been investing in various other, especially in the UAE and other places. I think they will continue to, but right now there's a little bit of a psychosis. But that's, according to me, still something that will, water has to find its level, and things have to stabilize, and then everything will be forgotten.
Okay, thank you so much, both of you, gentlemen, for coming in and giving us that perspective this morning, bright and early on a Monday, with regard to trends in the realty space. Let me again switch conversation, go across. We have Abneesh Roy joining us, Executive Director